Forex trading purpose growing in abundance. Hello guys, today we are going to look at when to trade, when should I trade, when should we trade, and when should we trade. Upon finishing this lesson, you should know the answers to the following questions. What are the four trading sessions? What happens during each trading sessions? What is the best time to trade? When is the worst time to trade? What do the words volatility, liquidity, spread, and volume mean in Forex? Before we get started, let's look at the vocabulary in the Forex. We have the spread. In Forex, you don't just pay commissions, you also pay something called the spread. And the spread is the difference in price between buying and selling the base currency. The spread is the difference between the buy price and the sell price. For example, if Euro USD is 1.05432 to buy and 1.05434 to sell. The spread is 2 pips. When the market is busy, spreads are very small because there are many buyers and sellers. But when the market is quiet, spreads widen and trading becomes the most expensive. This is why timing your trades with the right session is so important. Volatility. Volatility is simply how much and how fast the price moves. When the volatility is high, prices swing up and down strongly. This gives more opportunities for profit but also increases risk. Low volatility means the market moves slowly and steadily, which is safer but can be boring for traders. The highest volatility happens when London and New York are open at the same time. The lowest volatility happens when only Sydney is open, especially late at night. We have liquidity. Liquidity means how easy it is to buy or sell without affecting the price. Think of it like this. If you are selling a phone in a big city, you will quickly find a buyer. But if you are in a remote village, it will be hard to sell at the same price. Forex works the same way. When liquidity is high, trades are executed instantly, spreads are tight, and prices are stable. When liquidity is low, spreads widen. Sometimes your trade enters at a worse price than you wanted. Major pairs like Euro USD and USD JPY are the most liquid. Volume. Volume refers to how much currency is being traded at a certain time. High volume means many transactions are happening, which usually leads to more predictable trends. The London session has the largest trading volume in the world. Nearly 35% of all forex trade happen during London. Volume increases even more when sessions overlap, like London and New York. This is why those times are the most profitable for traders. Although the forex market is open 24 hours a day, it doesn't mean the market moves the same way all the time. Instead, the market is divided into four main trading sections based on major financial centers. That is the Sydney, Tokyo, London, and New York. Each section has its own behavior. Sometimes the market is quiet. Other times it is very active. If you understand how these sessions work, you will know when the market is best for trading and when to stay out. We have the Sydney session. The Sydney session is the first to open each day. Starting around 10 p.m. GMT, it is usually the quietest because the big banks in Europe and America are closed. However, it is still important for currency like the Australian dollar and New Zealand dollar since their local economies are active. If you're a trader who prefers slow, less risky movements, the city sessions may suit you, but don't expect big profit here because the market moves gently. Then we have the Tokyo session. The Tokyo session, also called the Asian session, begins around midnight GMT. Here the, Jap- Here the Japanese yen becomes very active since Tokyo is a major financial hub. The market starts to wake up a little, and you will notice more movement compared to Sydney. Currency pairs like USD JPY, Euro JPY, and GBP JPY are the most traded. Tokyo often set the early trend for the day, which Europe and America later build on. We have the London section. Now comes to the most powerful sessions. London, starting around 8 GM, GMT, the London session is when most of the world's money moves. Nearly 35% of the Forex transaction happen here. The market becomes very liquid, spreads are tight, and volatility rises. You will often see big breakout or clear trading moves. Traders love this session because it gives strong opportunities to profit, especially with pairs like Euro USD, GBP USD, and gold. This is the best time to catch major market action. And lastly, you have the New York session. The New York session starts around 1 p.m. GMT and is the second most active after London. This is when the US market joins in and it overlaps with London for a few hours. During this overlap, the market is explosive, liquidity and volatility peak, and major economic news from the USA like the non-farm payroll or Federal Reserve decisions can move the market massively. Pairs like Euro USD, GBP USD, USD JPY, and gold are perfect to trade in these sessions. Now let's look at the best time to trade. The best time to trade is when the market is busiest. When the market is busy, that is during the London session and even more during the London New York overlap between 1 p.m. and 5 p.m. GMT. At this time, spreads are the lowest, volume is the highest, and price moves are clear. If you're serious about trading, this is when you should focus your energy because the opportunities are the strongest. Last but not least, we have to look at worst time to trade. The worst time to trade is when the market is low and empty. That is usually after the New York session closes and before Tokyo opens. Around 10 p.m. to midnight GMT, liquidity is very low, spreads are wide, and the market barely moves. Another bad time is Friday evening when traders are closing position for the weekend. The market becomes unpredictable. Also avoid trading on holidays like Christmas and New Year because almost nobody is trading seriously and the few trades that happen cause unstable movement. Narrated by David Hero, trainer of Ajapex Academy.